Hello and welcome to Ticker Tapes. Today, we're back in the world of ETFs. New research from Cerulli Associates, a consultancy specializing in financial services, finds that Asian demand for ETFs remains robust. A survey of fund managers in the region found that 80% of managers in China intend to enter the ETF space and are developing ETF products. There were similar positive responses from institutions in both South Korea and India, where at least 60% of the money managers surveyed were in the process of creating ETF-based products. Inflows into Asia-based ETFs, excluding Japan, in 2021 hit a record $91.8 billion, up from a lowly $11.5 billion in 2020 and $58.9 billion in 2019, according to data from Cerulli and the Financial Times. ETF assets under management in the region rose to $421 billion by the end of last year, a figure that is attracting interest from institutions that increasingly view ETFs as tools with which to build portfolios and allocate assets to specific investment strategies and themes. Single-name leveraged ETFs may only have just been given the green light by the SEC, but some of them are making a name for themselves already. For example, PYPT, which offers traders a 1.5 times leveraged exposure to the performance of PayPal stock, jumped by 24.99% over the last 5 days, albeit on thin volumes of shares traded. PYPT outperformed both the ProShares S&P Clean Tech ETF, CTEX, which rallied by 22.79%, and DAP, the VanEck Digital Transformation ETF, whose price rose by 21.31% over the last 5 trading sessions. We flagged DAP a few weeks ago, highlighting increasing demand among investors for several of the fund's key holdings, including Silvergate Capital, which is up by 78% over the last month. Those gains demonstrate how fickle investor sentiment can be, how quickly that sentiment can turn, and how effective ETFs can be in capturing the market performance that these mood swings generate. This week has seen the launch of a new gold bullion ETF from Sprott Inc., a precious metals specialist. The ETF will trade under the ticker SESG. The Sprott ESG Gold ETF is said to be the first ETF that invests in gold bullion and meets environmental, social, governance, and provenance standards. Gold mining and investing can be seen as environmentally unfriendly, something that Sprott hopes to overcome with this new listing. Sprott has partnered with the Royal Canadian Mint, who will hold the physical bullion that supports the fund, which in turn will be sourced from several Canadian gold miners, including Yamana Gold. GLD, the Gold Spider ETF, which is the biggest physical gold ETF in the world, has had a mixed 2022, rallying by 2.51% in the last week, but down on the year to date by 4%, though it has picked up a net $2.2 billion of new cash over the first 7 months of the year, and GLD now has a total of $57.26 billion under management.